This is Robert Kraft, and I'm your host on SNN.Network. And joining me right now is Ken D'Entremont.
Wow, Robert, that's great pronunciation. Well done.
There we go. He is the CEO of Medexus Pharmaceuticals. It's a publicly traded company. The symbol is MDP on the TSX Venture and MEDXF on the OTCQX. Ken, thank you for joining me today. How you doing, man?
Hey, Robert, great to see you.
Well, last time I was able to do the perfect pronunciation of your last name was on July 7th last year. That was when we published our last interview. So let's start off with an update. Give us some highlights of the last, I guess, 6 to 9 months.
Yeah, it's been a really busy period for us. We've had tremendous progress in terms of our base business. Quarter results, which we just put out earlier this week. We did 31.5 million of net revenue last quarter and 5.1 of positive EBITDA. So our base business continues to perform extremely well. But most excitingly, we've got some really significant business development that we completed. I think last time we spoke, I was talking about we're working on 3 kind of late stage business development projects. I'm happy to confirm we've got 2 of the 3 done. I'm hoping for the 3rd. But the 2 that we completed since last we spoke, one was triamcinolone hexacetonide for the US. It's a long-acting intra-articular corticosteroid for juvenile idiopathic arthritis, basically arthritis that affects children. So we've got that now licensed in the US, and we're working on the registration. And then I guess about a month ago now, we announced that we had completed the licensing deal of treosulfan for the US. And that's a big deal because treosulfan is a rare treatment for a rare condition. It's stem cell transplantation. It has tremendous improvement in survival for those patients, and it's an orphan designated drug. So it's got excellent exclusivity, and it's a near-term opportunity. We will hopefully get this approved in August of this year, and then launch in the September-October timeframe. And the potential for that drug is more than double what our current revenue is. We think it will be in the order of 125 million net revenue peak sales US dollars. So it's a pretty big deal.
Sounds like you got a lot going on. So for those who may not be aware, how does some of these licensing deals work? Can you explain that?
Sure. I mean, we have a full business development effort. Many of us are focused on, finding the next opportunity, either through M&A or through licensing. And so, we're constantly reaching out to companies, searching the databases, all the various mechanisms of finding good opportunities. Treosulfan actually came from a right of first refusal with Medac GmbH, who we did a deal with 2.5 years ago. So we've been aware of that product for quite a while and have been working on it. And so that came through that channel. And I would also point out that we do have this ROFR for other products in their portfolio. So there are other products that may well come through that channel for us.
Very good. And so I also have to know, I mean, you must have some criteria in place. It's not just, comb the database. All right, that one. You must have some criteria that you put together. So you're like, okay, we want to go after this one and that one and explore some of these licensing deals. So what are some of those?
Yeah, absolutely. And really, it really points to our business model. What we're trying to do here is leverage existing infrastructure. So remember, we have teams, sales and marketing teams, completely built out in both the US and Canada. And so what we're trying to do is find drugs that fit in the portfolio of what those teams are already doing. And so for us in the US, that means either rheumatology or hematology. Treosulfan is a hematology drug. Or in Canada, it's a little bit broader. It's rheumatology, hematology, allergy, primary care. We have a bigger portfolio in Canada. So we're basically looking for drugs that fit within those portfolios, and drugs that we can get registered and drive to peak sales. So we're looking for innovative things, rare disease, orphan drug. Those types of opportunities are the best opportunities. One, because it serves an unmet medical need in the marketplace, but also it affords protection. There's good IP protection from competitive products. It kind of ticks all the boxes for us. So that's basically what we do.
Sounds good. So to close this out here, just like I asked you back in July, would love, now moving forward here in 2021, from what you can tell us, of course, what would you say are some of the company's growth drivers and value catalysts moving forward?
Yeah, I mean, continue execution on the base portfolio. I mean, we're showing nice progress with the base portfolio. We're going to try and fix the valuation gap that we have right now. If you've been following our stock, you see we've had really nice progression of late, and the volume of shares traded has grown dramatically. But there's still a big gap between how we're valued and how many of our peers are valued. So we think we'll close that gap with a NASDAQ listing. We've already announced that. We think that'll happen in the April sort of time frame. And then obviously the triosulfan launch, PDUFA date is August, and then we'll launch shortly after that. So it'll be an exciting year for us.
Well, look, I look forward to following along on all the updates, and I'm sure we'll have you back on soon to discuss some of them. So with that, Ken, where can our audience go and find all the information they can on Medexus and follow along?
Yeah, everything they need can be found at medexus.com.
Very good. All right. Well, Ken, thank you so much for joining me today. Stay safe. Good luck. And look forward to our next update.
Thanks, Robert. It's great to see you.
Great to see you too.